The biggest asset is yourself. The biggest asset.
Really, right? Because you're the income,
Think about it,
essentially.
right? If ever, tell me if you had a machine right there and you spun the machine and it just spat out money, right? Every other week it spat out money. Are you insuring that machine?
Hell yeah.
That machine is you,
Right, yeah.
right? So why not get insurance on yourself to make sure that we're properly protecting your family?
Welcome to the Opposites Unite podcast.
where we discuss real estate and lifestyle topics,
Break barriers
build connections,
and find common ground.
let's unite.
All right, so here today we're with Henry Rodriguez with the Henry Rodriguez Agency,
Yes, sir.
right?
Yes.
Yeah, man, I've been dying to have you on the podcast. You're the man when it comes to insurance, man.
I try to be.
Right?
Yeah, I appreciate you having me on.
Yeah, it's we got a lot of topics to talk about, a lot of interesting stuff. Insurance is a thing right now, man, because us being in real estate, we have like clients that get into there are properties that we just flat out can't sell because can't insure, right?
Yeah, because insurance is such a hot topic, right?
Yeah.
It's funny. So I've been in this business now for going on 14 years, and I never in my wildest dreams would have considered insurance as such an integral part of escrows, right? Like historically in your career, it's always your go-to title person, go-to escrow, go-to lender, right?
Yeah.
Very rarely is there like an integral cornerstone piece of an insurance agent, because you normally go, you know what, whoever you have your car insurance through, go ask them to
Bundle?
insure,
Get a
exactly,
bundle?
bundle it in and get your home insurance through them, right?
Yeah.
And so when I started working with a lot of real estate professionals, I made it so that insurance isn't important, right? We are, or is of importance. We're insuring your client's likely biggest asset, right? Their home.
Yeah,
right?
yeah. Well, it's always been a very critical thing, but it hasn't been such a big deal breaker, right? Like before, it was like, okay, just know that you have to incorporate, like, I don't know, just a number like 6 in my head is 0.35, right? Right. Like that's don't know how to remember that, but like, that's just always been a part of building it into the cost, right? And
or it's always been like $100 a month.
Yeah,
right?
But to tell people like, hey, like, listen, you're in a fire zone,
Yeah.
and like your insurance is like 3 times the amount of your old house.
Yeah.
It's like, whoa, okay. And then that it probably doesn't go through a major carrier.
Right.
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 So tell me about Fair Plan, dude.
Okay. So the Fair Plan was put in place, right, as an insurer of last resort, right? It has become almost now most people's, especially here in the Santa Cruz Valley, like their primary, their number one and only choice because of the issues we have in the insurance industry, right? And that's very, very unfortunate, right? So it wasn't designed to grow, right? So that is not like what the intentions were. The intentions for the Fair Plan were to, and are still to, offer a product, offer insurance to a home in more rural areas.
Yeah.
Right? Not like in the middle of Valencia, right? Or the middle of Saugus. It wasn't intended to balloon as it has recently.
That is such a crazy concept, man, that we've moved basically like the backup coverage into our primary source for coverage.
Right. And it's very unfortunate because of what's going on in our industry. And I truly believe that it is a systemic issue that we're having that has gone on for far too long, and it does need to be fixed. Right, our leaders, our local elected officials, we need to do something. Right, from a legislative standpoint, they need to do something, and because it's impacting so many sectors, like you were saying, right? Like if it's a deal breaker now, like home insurance has never been a deal breaker on any escrow.
No, I mean even like because it's not such a huge expense, right?
Right.
It wasn't such a huge expense, but now like the expenses can be so high, and then you're getting the Fair Plan doesn't necessarily cover everything, right?
Right.
So then you have to get another one to cover the actual stuff that's in the house and stuff like that, and the contents.
Right.
And if you and I'll let you expand on all that because I'm getting in over my head on that, but like. That's a huge thing for people to come to terms with when they're trying to buy a home.
Yeah, the expense is a big deal, but it is also a sensitive subject, right? So right now, more so often than not, when I'm talking to clients, I'm saying, hey, if there's a rate increase, even if I'm just talking casually to friends or family, and they're not insured, by me directly, if they're coming to me saying, hey, you know what, my insurance has gone up, I'm almost like, good. We need that. And then they just look at me like I'm crazy. I'm like, well, if they're going up, that means that your carrier is still in the game. Because what you don't want is to get this nice little letter that says you're being canceled or non-renewed because your company has now exited the California market, right? Because if you actually look at it, and I can geek out on this all day long, but we have 12 major carriers in California that insure 80% of all homes, okay? 8 of those 12 have completely exited the market. That's a serious issue.
So you've got 4 left.
4 left. And arguably those 4 are with the eligibility guidelines in terms of qualifications to insure very heavy restrictions. Now I say that with an asterisk because I don't represent those companies, but I can assume it because I know when I studied the industry that it comes with heavy restrictions.
And what do you mean, like heavy restrictions? They won't cover the areas that are like even
correct.
in any kind of high risk.
A home that has an older roof, a home that's built before 1970, or that has outdated plumbing, like very heavy restrictions.
Yeah.
Right? So when you have 8 out of 12 that have completely left the state, that should set off all kinds of alarms.
I have a friend who called me and he's like, Gabriel, like my insurance company sent me a letter saying that they want to check my plumbing. They want to check my roof.
To my point.
So what he had to do basically was get a home inspection on his house, like hire a home inspector to provide a report and then submit it to the insurance. Otherwise, they were going to cancel him. And last time I talked to him, he had submitted it all, but he didn't know if they were going to cancel him still.
Right.
So he's still kind of like worried, like, hey, are they going to cut me off?
Right.
That
is an ugly reality.
Yeah.
Right? That is a very ugly reality because of Prop 103, right? So they're just unique laws and only unique to California, unlike any other state in the U.S.
Yeah.
There's unique laws to California that are built into Prop 103 that really, really handcuff insurance companies. At the end of the day, we're a business. We're a for-profit business, and the consumer should want the insurance companies to make money because then we can keep our promise of being there in the event of a catastrophic event, right? A fire.
Yeah.
In here in Santa Cruz locally, our number one claim isn't fire, which everyone thinks is another common misconception, right?
Right.
Our number one claim is water damage.
Okay.
Does that make sense?
Yeah, but that wouldn't kind of fall in line with the current concerns, which are fire, right? I mean, we have more fire concerns than anything.
Ironically enough, what I'm saying here in Santa Cruz, I'm speaking here hyper locally, right?
Right.
So if our number one claim is water, right? Water damage, right? A leaky pipe, things like that. The FAIR Plan completely excludes that. That it's not a good policy for everyone to have.
So basically, the number one claim that's filed is excluded by FAIR Plan.
Correct. It's excluded.
Now,
that's when you start getting into the higher costs because then you have to get what is called a companion policy or a wrap policy to cover everything that the FAIR Plan doesn't cover. Does that make sense?
Yeah. So you're basically having 2 policies.
2 policies to insure your one property.
Do you think in California, our property values are obviously way higher than
most of the country.
Yeah,
right? Yeah.
Right. So we're going to get like crazy property values, and then we have like communities, unfortunately, like Altadena and the coast where we saw some heavy losses, right? So heavy, like billions of dollars in losses, and why these insurance companies now have to basically bear the brunt of that hit because a lot of them did.
Right.
They were covered, right, and they were exposed,
right,
and then now they're like even worse, and that's probably. I mean, insurance companies have been pulling out for years now, right? I wouldn't
say years, but they have restricted a lot more.
Yeah.
Right. So insurance companies they assess, right? They assess risk for living.
Yeah.
They know what's going on, right? So I can't preach enough when I'm saying if 8 of the 12 major insurance companies in the U.S. have pulled out of California, there's a major issue there, right? Our local legislators should be looking at that and saying, what's going on?
Yeah. Wow. That's well, I mean, it's like running a bad business, right?
Right.
At some point, you have to cut your losses.
It's exactly right, and that is the unfortunate truth, and that's when you start seeing insurance companies, either scale back or start the cancellations and non-renewals and or leave the state, and we don't want that, right? We want a free market. We want actually legislation that actually encourages insurance companies to come back to California, right? So that we have an open market, so that now you have insurance companies competing for your business.
Right.
Right now, there's no competition because no one wants the business because it's not good business.
Well, what I have been seeing, where like I think it's more impacting it more like directly, because homes is one thing and they can always go to fair plan, but in condominiums,
can they always go to fair plan? I mean, that right there is a $1 million question. So right now
I haven't seen one shot down by fair plan.
So they can't, right? But they're completely broke. So this is another thing that's not in the media right now. So they actually have they're built in almost like a bailout, right? So
yeah,
and maybe bailout is the wrong word. It's the private companies are the largest reassurer of the fair plan. So the fair plan did not have enough money to cover their losses in the recent fires in Altadena and the Palisades. You're looking at me like, what are you talking about, right? So here,
no.
Here's some.
I think I know what you're talking about, but I'm gonna keep going.
But this is what we're talking about earlier, like the ugly realities, right? So we're the biggest reassurer of the California Fair Plan. So in the event that they don't have enough, and it just happened with the Palisades and Altadena, then the private companies have to come in and also basically bail them out because of their poor mismanagement. Again, the fair plan was not intended to have so many policies. They grew, I think the last number I read, it was like 220% over the last couple of years. It wasn't designed to do that.
Wow.
It was not. It was simply not. So when the last catastrophic fires that just happened, right, back in January, they didn't have enough funds. So now they are going to the private companies and saying, here's, we need your portion to cover these losses, which again is a systemic issue.
Well, yeah, it's like a bank that doesn't have enough money in the bank, dude. You know what I mean?
It's exactly right.
Right?
It's
and
exactly
if everybody
right.
pulls up and tries to get their money out and there's not enough money, it's like...
Right, and we had that, how long ago when all the banks were bailed out, right? But that wasn't like written into law, where here in California, uniquely, Prop 103 has it built in.
So explain to me a little bit again about Prop 103 and exactly what that does.
So Prop 103 was put in, and again, I don't know exactly when, but it was put in, I believe, in the 80s. It was there. The intentions are to protect the consumer, right?
Right.
But they're just over-regulation in California, right? So again, when you make it impossible to do business from an insurance
Does it
industry,
protect, is it intended to protect the consumer from excessive costs?
So here's the way that I explain it. So if you're you've gone to the supermarket and you've seen how much eggs cost, right? You've seen how much a milk costs these days. You drive to Starbucks, your coffee is what, $8, $9, $10 now.
Yeah, right.
No one regulates that, right?
That's all gone up.
And it's all gone up, right? To keep up with inflation, cost of labor, everything has gone up, right?
Right.
We're restricted. We can't just say, hey, we're going to look at certain models and predict we're going to be here and then raise rates. So another common misconception that insurance companies, we can't just go in there and raise rates as we please.
Yeah, well, you know what, and what to kind of tie into what you're saying is if that house that used to cost $500,000 to build, because of the cost of labor, cost of material, now costs $800,000 to build, the exposure to the insurance company is higher. Therefore,
much larger.
The premiums should be higher.
But they can't because we have to go through this process via Prop 103 to go ask for rate increases. And that process can take a significant amount of time. Right? Here's the best way that I describe it is that the insurance companies are operating in a pre-pandemic world in terms of insurance rates and a post-pandemic world where everything has skyrocketed, right? We saw hyperinflation.
Yeah.
Right? Our rates have not caught up. Our rates haven't caught up for the last 10 years, let alone the last 5.
So that's why insurance companies wouldn't do it. I mean, it's just like coming in there and somebody forcing you to sell your product for what you used to have to sell it for 5 years ago before everything got more expensive.
Right.
And that's what that prop does.
Exactly, right? So another good way that I explain it is, let's say you owned a hot dog stand, right? And you knew you had to charge now $5 for that hot dog, but California said, no, you can only charge $2. Right, and the only way that you could charge $5 is if you go through a process and basically explain as to why you have to charge the $5, and that process could take up to 18 months. How long would you stay in business for? Well, if you knew you had to charge $5 from the $2.
Well, in the 18 months, I'm selling hot dogs for $2, right?
Right.
So,
but if you had to charge, you're losing.
Yeah.
Right. You're losing your tail off.
Yeah.
How long would you be in business for? Probably not a long time.
Well, from an underwriting business, and insurance is, from what I've seen, insurance is the number one underwriter of risk.
Correct.
They, like with life insurance, with home insurance, car insurance, they will not, like, it's like forcing an insurance company to like insure a guy who's got like 3 DUIs the same way they would insure somebody with no tickets, no license, had a license forever, and like in a safe driver basically. So that's kind of, that would, obviously there's more liability in one than the other, right?
And again, that's why you're seeing this mass exodus of insurance companies, right? Because yes, they know their business, they know their models, they know what they have to do. They've done it for years and years. It's what they do for business. Why not trust those companies? Or at the very least, why not ask them questions like, why are you considering leaving? Why are we non-renewing? What, as a state, from a management perspective of the state, how can we help support and collaborate and figure this out?
I'm thinking of like something that's probably a no-no in my business is, obviously if the prices of homes came down, then it would kind of fall in line with the cost of insuring them, right?
Sure.
It might recede back into that.
Yeah.
Or the premiums can go up.
You hit the nail on the head. You were talking about how property values in California are amongst the highest in the nation, right? Probably the highest, right? But if you look at a chart in terms of like average cost to insure a home by state, California's at the bottom half. How does that make sense? If we have amongst the highest in real estate cost, right?
But that's not even earthquake, dude. You know what I mean? That's don't come at me. Don't come at me. But like that's what that's the dirty word, man. Nobody wants to talk about it but it's a thing. So like that's something that's in the background.
Right. We haven't had one in a long time. And how do we properly insure a client, right? You get them in the home, you do your process, right? You work with your preferred lender, you work with your preferred insurance person, you properly protect that now asset, right, with the proper home insurance. And 100%, if you live in California, especially in Southern California, for me, it's a deep conversation as to why I have earthquake insurance.
It's a gamble, man. Every day you don't have it, it's a crap shot, right? I mean, really.
And the more and more equity you have in your home, the more and more at risk you are.
Well, correct. Like a lot of those people in the Palisades, I was seeing because some of them had inherited these properties, right? And say these properties are worth $5 million. These people are not income generators of that type of an income, right? But yet they own the asset outright, and sometimes just the cost of insurance would be too much for them to cover it. Right. So they were winging it. They were just kind of playing that. So now you go from basically now you own raw land because there's no real coverage for your property. Right. And I did have a renter apply, and this wasn't it was in North Hills up by Calabasas. Similar fire, but they had a complete loss. And they were both teachers, right? So they had decent incomes, but when it came to qualifying for a rental home, they honestly didn't qualify for much. Yet because their home was paid off, they did. They could live that way. They had a sustainable lifestyle, but now they're going to have to pay rent. Yeah. And before they didn't even have to pay insurance. It was maybe property taxes only, right?
Right. So we have a serious issue, right? We have a serious issue, and it needs to get fixed. Now, I'm going to switch gears. I don't want to be just dark and gloomy the entire time.
All right, thank you, man.
There are measures that are being taken. The commissioner has a plan, but how long that plan has taken and will take to go in, to be executed. There's just a lot of red tape in California. That they need to fast forward a lot of these things. I was watching a video of the commissioner who's basically in the hot seat, and a lot of other legislators were asking him like, hey, why is this taking so long? And it's in the last 10 years. But it's funny, and I'm looking at this, I'm like, where all of you guys the last 5-10 years? These all the questions should have been asked more proactively, not after a catastrophic fire, right? Yeah, exactly. So I don't know. I don't want to get too political, but the nuts and bolts is it is a systemic issue, and it needs to get fixed, and it needs to get fixed now.
Okay, so to bring it back into real estate a little bit more, and like what I mentioned with condominiums. So the one thing I look at, and I'm sure insurance companies look at, but more importantly, lenders, right? So if somebody wants to get a loan in a complex, and they look at that master policy, and that master policy, and there's like, say, 100 units in there, and each unit's worth, and I'm going to keep it at like 500,000 to keep it easy, right? So 100 units at 500,000, if it's a complete loss, you're, I don't
On
know.
the risk
I need
a
a
lot.
calculator for that.
Yeah, right,
but that's
right.
like $500 million
Yeah,
or
yeah,
something,
yeah,
right?
yeah.
Like or $50 million. I think
Right.
I'm right with that. But like if they lost $50 million
Mm-hmm.
in one complex, and their coverage is say $10 million,
Mm-hmm.
what's going to happen to those other 40 people, right? And I think the lenders who are going to fund a loan are going to look at that and go, am I going to necessarily be able to fund that? And that's what we're having a lot of problem with these
Right.
condominiums.
Right.
And what I do see, and more directly to kind of what we talked about with values,
Mm-hmm.
is that those prices of those condos, because less people can afford to either do a conventional loan or some
Right.
type of special financing, which requires higher down payment, higher interest rate. Something's got to budge.
Right.
So either the condo owners have to drop their price
Mm-hmm.
to make up that margin, and I don't think it's affected the actual single family home market.
No, yeah, not as much as the condominiums, correct?
Because that's more of a direct impact, but that's where I see it more directly, right?
Yeah.
Not that I haven't seen it in regular homes where people are forced to buy. What did we the policy that we talked about earlier? The
best policy.
fair plan.
Oh, the fair plan. Yep.
Yeah, where they're forced to buy the fair plan with the wrap,
Right.
right? And that's more expensive,
Mm-hmm.
and their costs are probably double to what they're used to
Used
paying.
to.
So yeah, it's definitely an impact to the real estate market in that sense. And I'm just curious to see what the legislation or the people in power in
Yeah.
our government are gonna do to fix it, man.
Your guess is as good as mine. I've just dug a little deeper into it, but
Yeah.
I mean it hasn't got fixed, right? And it should have been fixed again 10 plus years ago, but here we are now, right? Now we're at the aftermath of 2 catastrophic fires, and we really dodged a bullet with Castaic. I mean that was in our backyard, and all I can do as as a local insurance representative here is be there for my clients, right? There's a lot of scared folks out there, so it's at least sending them a text message or anything, letting them know, hey, questions, concerns, anything, we got you.
I was at the networking meeting, right?
Mm-hmm.
We were all in a circle.
Yep.
We were talking, and then another agent walks in and says, hey, guys, if you have a client somewhere in that area around Castaic,
Mm-hmm.
You guys should probably check on them because right now there's a big
Right,
fire in
yeah,
Castaic, right?
Right. Well, that's
And-
right. We were right in the middle of the
Yeah.
meeting. That's right. Yes.
It was 10:30. I
Yes.
remember
Right,
because
right. Yeah.
I had 3 closings that week and the week after, right? They split up.
Right.
So I had to meet the guy in Tesoro, which is new construction,
Mm-hmm.
right? And he had just wired cash to the developer
Mm-hmm.
like the week before. So basically, they had all the money for the property,
Mm-hmm.
and he's staring at me, and this look on this, he looks at me and he goes, "Ever, what am I gonna do if my house burns down?"
Right.
Like, and he hadn't completely recorded, so I think he was safe.
Yeah.
But dude, that look on his face, and there's a 747 behind him buzzing,
Right,
like buzzing
yeah.
around,
Yeah.
and the things, it's dropping that red stuff
Yep,
on
yep.
the like, and I'm just,
The fire retardant
dude,
stuff, yeah.
it's so surreal to me.
Yeah.
That whole look.
I love that you brought that up because I want to give a shameless plug to to the city of Santa Clarita. You see how swift they took action.
Oh, it went down.
Right.
Yeah.
Compared to the unfortunate situation that was in the LA area. Right. Like
Yeah.
we have such a quality, well-ran city here. And give it up to Ken Striplin, our city manager, our city council, one in particular, our current mayor Bill Miranda. They're all at the forefront making sure that this was tackled. Again, we dodged the bullet, but I think it was the swift actions that our city took, and the proactiveness. Right, there was water in our fire hydrants.
Yeah.
It's
Unfortunately, we're not strangers to fire.
No, yeah. There's not. Unfortunately, in Santa Clarita, there's an annual, fire
Right,
season.
right. We have a fire season.
So that's unfortunate to us, but it just goes to show how
We are
well
definitely-
managed
we're
our
set
city
up.
is. We're set up. I mean, it's badass.
Yeah, it's a good feeling to know that there's fire nearby, and you're pretty confident that it's going to do
Very,
anything.
very confident.
Yeah, and that I had to instill that into that man who had put a serious amount of money down, right?
Yeah.
Or into this property.
Your client's house is likely their biggest asset, right? So we should be insuring it properly and
Yeah.
not via the fair plan unless they absolutely have to.
And he hadn't gotten his policy completely written. So he was like, really, he was in the wind, man.
Yeah.
He
Oh,
was
yeah.
in the wind with $1 million. You know what I
Yeah,
mean?
oh.
And it's just like, what does that look like? You know,
Yeah.
hey, like you work your whole life to, develop
Right.
some assets, and then you have it, and then like here it's and I'm telling you, I keep having this image of this man staring at me with these like really open eyes,
Right.
and the plane going behind him, and I'm just like, I don't know what to tell him.
Yeah.
What do I tell him?
Yeah.
And
What can you tell them?
and I had another client in Castaic where they're like literally moving out that day. They had the moving truck out front,
Uh-huh.
and they're loading the truck,
Yeah.
and the fire department's coming around evacuating them.
Oh, yeah. No, it was
Isn't that,
again.
like,
It was
insane?
it was a very serious situation. Again, all we can do ever as professionals at that point is just be there for our clients.
Yeah.
You know, me as the insurance professional. Again, I reached out to. With our CRMs, we have the ability to reach out to folks in the masses, right? So we took swift action. My team and I, we spent the entire week just reaching out to people that are in affected zip codes to make sure that they knew that we were there for them, even if it's
Yeah.
a simple text saying, "Hey, Ever, there's a current fire. We want to make sure that you're okay." We have resources available to you at any time. Again, we're here for you.
That's huge, man. That's huge because.
Right.
The insurance is something. It's just that, right? I mean, we all don't think about it, but
Right,
like
right. No one likes
it's
paying
there-
for insurance.
It's
Yeah, I
there
get it.
to ensure
Yeah.
that we have stuff after like a bad situation,
right.
And then we don't like lose everything.
Right.
So
And that's where I bring that for me. That's where my team and I bring true value is being there for our clients in their darkest hour, right? As they're seeing that 1,000-foot cloud of smoke, coming towards their house, them knowing that even if something were bad to happen, we got them. We're there for them.
yeah.
Check in hand, ready to go to do whatever we have to do to make sure that they're put back together.
How did you get into insurance?
I kind of stumbled into it. I was in wealth management prior to being a State Farm agent. I had a client who I was servicing when I was in wealth management, and I just thought it was a unique model, something that I thought I could be good at. I've always wanted to be a business owner, and yeah, again, kind of just fell in my lap, and it took me about a year to get into the company, and here we are now, 14 years later.
Dang, so you've been in it 14 years.
April 1st, like in end of this week, right?
Yeah.
Or next
April,
week? Yeah,
April
yeah,
Fools?
yeah, April Fools, yeah, April Fools Day, yeah.
So it literally falls on April Fool's?
Literally, yeah, my anniversary literally lands on April Fool's Day.
All
Yeah.
right, maybe you should have picked a different date.
Maybe different day.
April 2nd.
I have a
would be-
funny story to share on that, but that's for another segment.
All right. I'm like, what's the story about, man?
Yeah.
Yeah. So, well, that's interesting, man, because insurance is become such a hot topic and a hot factor, and you're like knee deep in the middle of
Yeah.
it, man. So
Yeah.
I really wanted to get you
Yeah.
in here and talk about that and get your 14 years of experience and, so, okay. So tell me, like, what's a good way to get, like, what's a good way to get insurance? Like, okay, so I think we're all trying to save on insurance nowadays, right?
Right.
What do you recommend as like a tip and trick to get good insurance or to make sure that you're covered, right?
Yeah.
And then what are some good basics?
Yeah, that for me, that's like insurance 101. It's like I understand cost is a big deal, right? But the bigger deal is making sure that your home, that your cars, that whatever we're insuring is actually properly insured, right? I think too many folks are out there, and I understand, right? Everything costs a lot of money these days, right?
Yeah,
so
yeah.
I completely
Everybody's
understand
trying to
that.
save a buck.
But at the same time, insurance is maybe not somewhere we want to cut corners, right? I think a lot of insurance companies out there have commoditized this, which is it's not, right? It's there to protect. It's there as a promise that, again, in the event of something catastrophic, even if a small fender bender, we want to make sure that we have the proper coverage, right? Whether it's your liability limits on your auto insurance to the dwelling coverage on your home, right? So I think number one, the most important is making sure that you are with a reputable company and that you trust your insurance advisor to make sure that they're properly protecting you, that they're guiding you, that they're explaining to you what these coverages are. Because too many people are out there, and I asked them, hey, who are you with? X, Y, and Z insurance company. Okay, great. What are your auto insurance limits? Well, I don't know. I've had the same limits since I was in high school. You have the same limits since you were in high school? I think you're a different person than you're from high school. What are you doing with those limits, right? You probably have a little dough in your pocket. You own a home or two, you know?
Yeah.
We should probably talk about how to properly protect all that stuff because all of your assets could be at jeopardy in the event of a bad car accident. You know, we live in a sue happy state. Right?
Yeah,
every other
big
billboard is
time.
an attorney out there. So we need to make sure that we're properly protected because the biggest risk that we take every single day is getting in our car and driving. Right? Whether it's you're at fault or on the flip side, if someone hits you.
You know what? I feel like even in an accident situation where you're not the one that caused it, you're still somewhat exposed in California.
Sure.
Because like if there's somebody else that's harmed in that,
Yeah.
and the guy that caused it doesn't have enough coverage,
Right.
They do come after you, right? Is that a
Play
a
that
thing?
one more time. The scenario?
Okay, so like say 3 parties are involved in an
Okay.
accident, right? One,
So a car that hits a car that hits a car.
yeah. So the guy that's all the way in the back hits you.
Yep. That person by California state law is responsible for everybody. Now
Which one?
it goes through like a whole process.
But does it go in everybody's pockets?
Whoever initiated the actual car accident is responsible for the car that hit the car that hit the car.
And what I'm remembering is that in a situation where, like, let's say there's $1 million worth of damage, the guy that caused all this stuff has 300.
Right. So there's not enough.
So there's 700 left over, and then the second guy has another 300. Do they come after that second guy?
It really depends on the situation, right?
Yeah.
So that's why it's important to have the right coverage because whether you're
Yeah,
at fault
exactly,
or
right.
not, your policy should protect you to make sure that you have coverage, right?
I know that I'm being probably a little too specific with that one because every situation is different.
Right.
But I think what I'm getting at is, and more to your point, is like make sure you get the right coverage
Right.
because courts do some crazy things,
Right.
man, and you can come out of there going, how the heck did I have to pay
Right.
for that guy when I wasn't the one that caused it?
And there's a lot of folks out there who are driving who are uninsured, don't have insurance,
Yeah.
right? So you should have a policy that protects you from that. So be asking these questions from a professional. Actually, your insurance professional should be reaching out to you. So my team and I, we make it a point that we reach out to our clients at least once a year.
Yeah.
We say, hey, Eber, it's time for your annual checkup, kind of like when you go to see your doctor, right, for your annual physical.
Yeah,
We
yeah.
need one of those checkups because we don't know how to properly protect you unless we talk to you and see what's going on in your world, right? Have we upgraded your car? Do you have you remodeled your house? Like we don't know, so we need to have that conversation with you at least once a year, at minimum once every other year, to make sure we're properly protecting you.
And that's kind of leads into the third thing, which is, I think we talked about car, we talked about home, we talked about life insurance, right? Because people don't think about that. And recently, within the last couple of years, I had a good friend that passed away, right?
Yeah.
And I did his, I sold him a house. I sold his house and got him in another house, and he got a mortgage.
Yep.
And, he had kids, man. And like his wife called me, Ever, did we have life insurance? And I was just like,
That's my dreaded call. That's my dreaded call. I feel like I didn't do my job unless I, at the very least, had that conversation.
Yeah.
Because we talk about properly insuring a family, right?
Yeah.
If they're fortunate to work with you as a real estate professional, right? And you got them into their dream home, right? And then you refer them to me to insure their cars and their home. We make it a point that, hey, in the weeks, within 30 days of you buying that house that we just insured, we need to have a more in-depth conversation about how do we prevent a foreclosure sign going on that front lawn. And then they're like, well, what are you talking about? Well, an ugly reality is your spouse, if you're not here and you guys are a dual income family, we got to make sure we're protecting that, right?
Yeah.
Because if you're not here, right, and you're pillared and that pillar is gone, then the house falls. We want to make sure that the house doesn't fall, right?
And I want to tell you, I used to have a little, and I was a little bit timid about it because I'm not trying to add another cause to something that's expensive. They're already buying a home, and so they're spending a lot of money,
Right.
And their budgets are very tight generally at these times, right? When you make a transition. And I'm not trying to add more cost on their belts, but at the same time, now I have to be reflective of like that happened.
Right. It happens all the time, unfortunately, right?
Yeah.
And here's what families can't afford, right? We're talking about cost, and we want to add another cost. I don't look at it that way. I'm looking at it that if everything's already costly and they're just getting by and they're a dual income household, what they can't afford is not to have life insurance. Think about it.
Yeah.
Right. If they're each making $100,000, right, and they're at $200,000 and they're comfortable, right? They're not buying Lamborghinis and things like that, right? But they're living comfortable, right? And they rely on each other's income. It's sustaining the lifestyle that you've built as a couple, right? And in the event of an untimely death of your spouse, making sure that your family's still protected, that their financial future is secure. And that's what I talk about with my clients, is making sure we're not talking about, getting your spouse, making them a millionaire. We're talking about, hey, if something were to happen, because that is an ugly reality in our world, right? People die, unfortunately. Making sure that families are properly protected, the financial future of that
At
household,
least the basics, right?
At least paying off the mortgage, right?
Yeah.
My philosophy is paying off debt plus 5 times your income, to making sure that the family, their lifestyle isn't affected, right? Let them grieve, right? GoFundMe isn't life insurance, right? Your family shouldn't have to do that.
Right. Yeah, that's
so. Don't go to McDonald's for a week, right? Because McDonald's is expensive. You go to McDonald's these days, it's $40-$50, right? Well, so forego that McDonald's or that Starbucks for that week and buy yourself a life insurance policy to protect your family. What's more important?
well, easy. I mean, on top of that,
It's a
McDonald's.
it's a no-brainer.
I don't want to badmouth McDonald's. Probably watch this and get me.
Sorry,
in trouble,
yeah.
No, but you know what I mean. Like that's you're double dipping on that one,
Right.
making a bad decision and spending money.
Yep, exactly,
right?
exactly.
You probably do better.
Yeah, exactly.
Probably won't die if you.
Right.
Anyways, man, that's something that for me, and I wanted to share that with you because it was very difficult, but it changed my perspective on it.
Yeah.
You know what I'm saying? Now it's like, before it was like, oh, it's a cost, and I'm not trying to put them any more cost and try to appear to be upselling them on something that is, that they don't need. Right. And then all of a sudden they go through this, and it's like, damn, man, like, I should have pushed these topics more with the clients. So now whenever I do talk about it, it's not even an issue to me.
Right. No,
It's like,
it should,
or at least you make the decision, not me.
Exactly.
I'm not, yeah.
Because what we don't want to be is in a situation where we didn't ask.
Yeah.
I should have asked. I should have said something.
Right.
And that's not the position I want to be in. That's not why I got into this industry. I want to be there to protect people. Like I said from the very beginning of this segment here, is I want to make sure that if a family trusts me to insure their assets, right? The biggest asset is yourself. The biggest asset.
Yeah, really, right? Because you're the income.
Think about it, right? Tell me if you had a machine right there and you spun the machine and it just spat out money, right? Every other week it spat out money. Are you insuring that machine?
Hell yeah.
That machine is you.
Right, yeah.
Right? So why not get insurance on yourself to make sure that we're properly protecting your family?
I'm a big advocate and proponent of buying life insurance. I have insurance myself. And even to get more, I don't want to get too far into that space, but like at the same time, I want people to know that, like, hey, that's something you got to visit, and even if you got to get the little bit or whatever you can. But if you're and everybody's situation is different, right? Not everybody. If like your house is already paid off and you've got everything's paid off and maybe you don't need that much coverage,
you'll never need zero though. I'm a strong believer that you'll never need zero. Because even if your house paid on, if maybe you're older, then we could talk about how do we transfer wealth tax-free. It's a whole other segment we can get into.
Yeah.
But at no point, I'm a strong believer of this, at no point, nobody will ever need zero life insurance. Maybe if you're Jeff Bezos, sure, okay.
But even that guy, I'm sure he does because they probably cover.
Because he's smart and he knows, yeah.
Well, I think at some point you insure like what you said, you're insuring your income, not so much you're insuring yourself. But what you've built in life, and you have assets, you have debts, you have liabilities, and sometimes it's to your shareholders. Like Bezos has a responsibility to his shareholders.
Yeah.
If he goes away, they're going to lose a ton of money. Right. Because he's the head of that.
Right.
And now you're like, he has to. I'm sure those people, he has a big policy on them just because.
I'm sure he does. Yeah.
Right.
Yeah. That's how it's done. Of course.
Yeah. See, there's like a CEO policy, right?
Oh yeah.
Yeah.
Key man.
There you go.
Yeah.
Key man policy, exactly what it's called. So like that's a big topic, So insurance is definitely the number one thing. Man, what about you, man? How have you been? Like just on
Life's a little crazy. But again, I'm just there for my clients and helping them navigate these choppy waters, man, because it's not easy right now. From either side. I know I came on this on your podcast, kind of guns blazing about like we gotta change the legislation here, and I get it from a consumer standpoint. Like everything has gone up, everything. So insurance is just one of those things that have gone up, right? But if you actually look deep into it, let alone someone who's in the industry, like we need those rate increases, and if it's not just for keeping the insurance market in California. Because what we don't want is we don't want the FAIR plan to be our primary choice.
I think the biggest argument that we're going to see there is, I mean, people are arguing about cost of gas going up.
Everything is going up.
Gas goes up $1, everybody loses their mind.
I know.
Like, you know what I mean? And and you know what? When money's tight, what are you gonna do? Gas goes up $1. Like you're what do you call it? That you can't make it to work.
Right.
So it's a real thing. And now if their insurance goes up, so like I think it's never going to be a very easy topic to navigate. But when you do the math, it just doesn't make sense.
Right.
And so companies that are insurance companies and businesses, and they're doing the risk assessments, and they don't pencil out, their losses would be too great if they were hit. So their exposure is too great. They're just going to pull out.
Again, this is far above my my pay grade, so to speak. But again, Prop 103. But if you allow a free market to come back into California, right, and allow insurance companies to compete for your business, right, then the consumer could win again. Right now, the consumer is losing because no one's competing for their business. No one wants their business in California. It's too risky, right? So we have to bring legislation to the table that encourages insurance companies to come back to the California market. How do you fix that? That's above my pay grade.
But that's where the hole's at.
That's the $1 million question. That is the hole.
Billion, right? Like I think it was like $60 billion. Was it $6 billion that I heard in the Palisades fire?
Oh yeah,
It was something ridiculous like that.
We have $2 billion paid out.
Oh wow.
So State Farm is the largest home insurance company in the nation, the largest.
So
we have over 20% market share in California.
Oh wow, and the new underwriting has essentially like been very tough to get insurance.
So
right?
we've actually been paused for almost 2 years now in terms of writing new home insurance policies.
And your exposure was still that great.
Yep.
Well, 20%, right?
Yeah.
And like you said something about the State Farm or the big companies, right? The big 12 you mentioned. They like essentially subsidize the FAIR plan.
Yeah. So we're the reassure is the actual terminology.
Okay.
Right? So we're the reassure. So if they don't have enough insurance, then we reassure them, right? So even private insurance companies have reassurance. So that's another issue within Prop 103.
Is that like leveraging insurance, like insurance leveraging insurance?
Kind of, exactly, yes, right. So you have to have X amount in reassurance also, and even that in California you can't find or is astronomically high. It's issues that are built into Prop 103.
Damn, dude.
I'll leave one other issue that I want to bring up, just because in Prop 103 is something that I truly believe needs to, I'm not saying go away, but it needs to have some type of reform, right? So forward modeling, right? I'm sure you and Carrie get together once a year. Do you guys do business planning? Do you guys forecast?
Yeah.
Well, in California, insurance companies can't forecast. We can't forward model anything. You can't do it because of Prop 103.
You mean you can't?
We can't forward model. We can only look back. Isn't that crazy?
Well, it ties your hands and it makes it impossible for you to make some smart decisions if
Ding,
you can't
ding,
kind of
ding,
look
ding.
what things are, where things have changed and
Correct.
where your exposure is now
Correct.
today versus
Right.
yesterday.
Exactly. It's a big issue.
Well, sometimes you look back, you can see what's ahead, but like, I don't know. That
If you're a business, you're constantly forward modeling. You're looking and trying to predict, right? So, yeah.
And well, AI is the whole thing.
Yeah.
You should be able to leverage that to be able to tell what the future is going to say.
Yeah.
But if you can't even do that, then that really ties your hands to not making smart decisions.
Right. And that's what makes it so not impossible, but so difficult to do business in California as it relates to the insurance industry.
Well, I hope they get that solved, man,
Yeah.
because that is a tough thing for us.
It is.
Right now, I'd say our volume is our actual properties on market are a little higher than they've been climbing over the last few years, and the prices continue to climb. Right, we still see that, and even with the insurance doing all that it's doing, although we are seeing some pockets that are struggling, but it's becoming less and less affordable, and I think that's where people are kind of struggling to be able to do the volume, right? But hopefully we can get that resolved and back on, man.
Yeah. And I'm gonna continue to help advocate. I'll be in Sacramento in actually next month in April. Just trying to fight the good fight and talking to our legislator and local elected officials and seeing how we can collaborate, how we could fix this thing.
Yeah, what I'm thinking is like you have to be able to see the numbers, right?
Yeah.
Because where are you going to get that money?
Right.
Is it going to come from the consumer? Is it going to come from the government?
Yeah.
Is it going to come from the insurance company? Or does it come from all three?
Yeah.
And maybe that's the solution.
Yeah, there's a formula somehow, right?
Right.
Yeah.
Well, I mean, you can't like go to Uncle Sam because you'll break Uncle Sam.
Right.
You can't go to the insurance companies because you'll break the insurance companies. You can't go to the consumer because the consumer will probably get on Uncle Sam, and then that winds up being the balance of what we see as government and free markets.
Yeah. Yeah.
So
we gotta see a free market. It has to come back.
Yeah, because now we're all like on the government plan, right?
Yeah. Yeah.
With the
fair
plan.
Yeah.
Interesting.
All
Well,
right.
man, I wanted to thank you,
Of course.
for I think we got into the real deep parts of insurance, man.
Yeah. Yeah.
and as how it pertains to real estate, because that's my space. And thanks for coming, man.
Of course. My absolute pleasure.
Yeah. So Henry Rodriguez.
Yep.
The Henry Rodriguez Agency.
Yes, sir.
Yeah, if you reach out to him. All right, guys. Well, thank you so much for watching the podcast, and thank you for coming to the podcast, Henry.
Of course.
I really appreciate you coming down, man. All right. Anything else you wanted to bring up?
That's it. If anyone needs help, I'm happy to help at any time. You can reach me at info@yoursfteam.net. Thank you, guys.
Thank you. Thanks for watching. Thanks for tuning into the Opposites Unite podcast. If you enjoyed today's episode, please like, share, and subscribe to our channel. Don't forget to leave a comment for a chance to get a shout out in our next video. See you next time.